It seems impossible, doesn't it, that they could even put another 0.5% on with the US government debt being on such a short term. I mean, why the heck didn't they create a 100-year and sell it at zero when they could have done?
That's where they're headed. They're headed to negative interest rates.
Yeah, they could have done a 100-year and sold it for 0.5%. Now the government, well, which comes falls on us. The government never takes responsibility for their incompetence.
Hey everybody, it's Rob Kientz with goldsilverpros.com. We are recording this May 5th, 2022. I think it's Thursday. I've lost track of this week. It's been a big news week, and to discuss that, we brought back on our recurring guest and good friend, Everard from Ark Silver. Ian, how are you doing today?
I'm good, thank you, Rob. Tired, but good. Yeah, it always cheers me up talking to you.
Yeah, well, thank you very much, and you as well. I think we had a good 30-minute conversation before we started recording, just talking about all the different things going on and the success of your business, which is always good news. We'll get to Ark Silver here in a moment because we're big proponents of what you do and the pricing that you offer to people for silver. We'll get to that in a moment. The big news today, and this may come out a couple of days after we record it, but as of today, May 5th, I'm sitting here looking at CNBC, and the Dow has fell 1,300 points. NASDAQ is getting absolutely obliterated. The stock markets are not doing well. The 10-year bond is up over 3%. And a lot of other stuff is going on that's contributing to this fall. But the first reason, the primary reason, is that Powell said the Fed decided to raise interest rates 50 basis points, 0.5%. They said they're going to do it again real quick, and they're going to taper start June 1, which is less than a month away. And I said, the beginning of this year, if they raise the Fed funds rate by 1%, we'll see a big stock market crash. Well, guess what? They've raised it 0.5%, and they already got a stock market crash. It's even worse than I expected. What's your view on that, Ian?
It seems impossible, doesn't it, that they could even put another 0.5% on with the US government debt being on such a short term. I mean, why the heck didn't they create a 100-year and sell it at zero when they could have done?
That's where they're headed. They're headed to negative interest rates.
Yeah, they could have done a 100-year and sold it for 0.5%. Now the government, well, which comes falls on us. The government never takes responsibility for their incompetence. They're what is it 8 trillion a year they have to refinance? I think it's 8 trillion comes due.
8 trillion. I mean, the numbers are so high, Ian. Yeah. You know, it's like the human brain can only handle so much. And then there's this theory in mathematics that once you get to a certain level, mathematics is not linear. It stops being linear and it gets on a different scale. Yeah. And I think when you get into the trillions, it's not that that's 8,000 billion. It could be 80,000 billion because the rules on big numbers change. And there's actual a whole philosophy around mathematics around this. Once you get to really high numbers, it doesn't act the way you expect. So as we get into these numbers, Ian, that you're talking about, whatever the Fed does, it ain't going to work because the same things that you would do at 8 billion is not going to work at 8 trillion. Because mathematically, it doesn't, once you get to that scale, the effects are different. And the way that the numbers and the math processes is different. I don't think the Fed has, I think whatever they do, they're digging their own grave.
It's definitely going to cause death and destruction. Yeah. So what before this rise, the US government interest cost was 500 billion, I think I'm right in saying, on the 30 trillion. So if we have 3-4 more 0.5% rises, the whole tax revenue of the US government will maybe pay the interest on the debt. So that means they're going to have to find another 3 trillion for their expenditure, normal expenditure, and then another trillion or 2 trillion for their usual deficit. So they'll have to keystroke, like you're saying, big numbers. So 1 and 9 zeros, I think, isn't it? 1 trillion.
So Ian, they would have to find it either from us or print money. I think we're at the point that people are like, screw you. I mean, the Biden administration's already at an historically low approval percentage. their rhetoric coming out is, if you don't support us, you're an extremist. So their reaction to that is to label 70% of the country that doesn't like them as extremists. This came out on the wire, and it was all over social media, and it was all over the press.
Well,
so it's us against them, and they've got the Ministry of Truth now, Department of Homeland Security, where they're worried about people criticizing them, and they're gonna stick the black boots on all of us Americans who are suffering from not being able to buy food every fucking month because of what the Fed and all of the administrations of the last 50 years have done. At what point does the American public say, screw this, we're done, you ain't getting it from us, and then the Fed has no choice but just to print money?
Well, it's going to happen, isn't it? I mean, the deficit is funded by creating more units of currency every year.
Yeah.
So my suspicion is they know exactly what they're doing, because every time there's a crash, the people behind the Fed gain, and every time there's a boom, the people behind the Fed gain. And Mr. and Mrs. Joe Public
they know what's going to happen and they position it?
Because they cause it. Yeah. Because if you're going to front run something and you cause it, like JP Morgan spoofing the market tens of thousands of times, not losing a trade in 10 years. Because they were directing that. If you know where it's going to go, you position yourself. You know, was it Jerome Powell supposed to? What's his worth supposed to be? Worth? How many dollars is he supposed to have? As a human, I don't know how much he's worth, but I'm not supposed to say things like that. $100 million. So he's going to risk 90% of that in purchasing power wipeout? Of course he's not. He'll be positioned. He'll have precious metals. He'll have farmland. He'll have properties abroad.
He probably owns half of 𝙎𝙃 along with former President Bush, I'm sure.
Yeah. And going back to politics, heck, why not stir things up a bit? My theory was on the election where Biden got elected was the Democrats knew what was coming. They didn't want to win the election, so they put up the most lamest candidate they could find, which was Biden. The Republicans didn't want to win, so thought, well, we'll let Trump run again. He's so obnoxious and he's offended so many people, nobody will vote for him. And the poor old Democrats won, and now they're left getting the blame irrationally, because, I mean, heck, what has Joe Biden done? He hasn't done half the spending that Trump did. You know, Trump was spending...
he's just Trump was and woke policies to destroy our republic, but in terms of spending, But
he hasn't got any major, stimulus checks and PPI and all of that stuff that Trump pumped out. What was it, $3.5 trillion out of nowhere?
When Trump was first elected, I thought, politically speaking, it would crash on his watch so they could blame Republicans.
Yeah,
it's crashing on Biden's watch, and this is not a political channel. I'm a libertarian. I don't play red or blue team, but I just read the tea leaves of what goes on in politics and try to interpret it. Why? Because politics is the engine that determines publicly how money gets spent and wealth in society. So you have to follow it if you follow economics.
Yeah.
But anyway, I thought it would crash on Trump's watch because, politically speaking, they wanted to blame it on a Republican. The liberal side did.
Yeah.
Which, makes sense. Your opposition. He's the enemy. But it's crashing on Biden's watch. He's taking it bad. Was this a screw up by the Democrats to win, or do you think that probably in a bigger sense, it doesn't matter who takes it because it's a banker's game anyway? The bankers don't care.
No, the bankers always win. Yeah.
Yeah. They're the house, essentially, aren't they?
Yeah. Yeah. The tables are rigged. They know exactly. And a few of us are allowed to succeed or do reasonably well, as long as we don't become a threat. And anyone or even any country that becomes a threat, they end up in trouble. I mean, you go way back to the First World War. It was Wall Street that funded the communist revolution that destroyed the economy of Russia for decades.
Yeah,
that was funded by American banks.
And 𝙎, which used to be 𝙂𝙊𝙇𝙑, there was a Stanford professor who documented, a tenured Stanford professor who wrote a book about this, which is free online, and I'll try to find his name. When it was 𝙂𝙊𝙇𝙑 before it was known as 𝙎, American company with German roots who funded a lot of the weapons used by the Nazis. And we know the American bankers and European bankers were funding Hitler's rise.
Yeah.
And so a lot of what happened in that World War, the belligerents came from funding from a lot of Western sources.
Yeah.
And this has been documented by many people. It's not conspiracy theory. It's been documented by tenured professors and well-respected historians. My question is, how much of what goes on in America right now in the American markets is funded by corporate interests or banking interests that essentially are like, we're just playing this to make money. We don't care politically and culturally how this turns out.
Yeah, they don't mind if people starve. They don't mind if countries go to war. In fact, they benefit greatly from that. So the only way us mortals can is to try and get out of that system. And that's what's led both of us to the precious metals. It's exiting the traditional, the recent traditional anyway, of the last 4 or 5 decades of financial system. It's the only way you can come out unentangled from it.
And to connect the dots, when we say Fed and bankers, the Fed is a private organization. It's not governmental, which is the shares are owned by the big, large private banks. I think Goldman Sachs, I would guess, is the largest one. Used to be JP Morgan, but the records are silent, so we don't know. But we know the big commercial banks own the Fed. They own probably most of the central banks in the world. So when we tie the banks to Fed policy, that's why we do it. Because ultimately, it's the dominant shareholders and the directors of those organizations which determine direction. So even though, presidents appoint Fed nominees, that's just an appointment. But that person takes their marching orders from who owns them, and it's the commercial banks.
Yeah, and I guess as a private company, they're responsible for their shareholders.
Yes, they are.
They would be acting illegally if they didn't do everything for the benefit of their shareholders, which means they're not doing anything for the benefit of us.
They're not. And for the government, so there's this two-pronged policy, the Fed trying to unemployment and inflation, and that's their mandate, blah, blah, blah. When has that ever worked? Do we look at Bernanke? Do we look at Greenspan? Do we look at whatever the other idiot that was just in there before Powell? I forget her name. She was so forgettable. I don't even know her name. She was
Yellen.
Yellen, the Treasury Secretary.
Yeah.
Maybe one of the biggest idiots ever to serve in that role. And by idiots, I mean academics with no real world experience. We're basically idiots. I know I was in academia and I understand this. Did any of those guys actually act in the best interest? We put out a tweet this week talking about Greenspan's, I think, a 66 quote about the gold standard and lack of discipline you would have and stealing of people's purchasing power if you didn't have a gold standard. But when he got in, he was the architect of the biggest, fleecing of America by his policies as Fed chairman, when he was Fed chairman. So, anyway, we could go on and on about that. We know, you kind of know who the Fed is and their policies aren't there to benefit us. I want to go over some of the other economic data with you that we're seeing in the last weekend. And it doesn't look good. Construction spending's down. Capital goods orders are actually up, but the unemployment report for ADP came out at 247,000. That's as a preview of the non-farm payroll, which comes Friday, which is the bigger of the two reports and the one that everybody trades on. But the ADP unemployment report's about 60% of what they expected. Our trade balance, which means how much we export versus import, is down 109.8 billion in a month, which is about 20 billion worse than expected. The US PMI is not doing great. The ISM services index is not doing great. Jobless claims are higher. Productivity is down. It's negative 7.5%. Falls at fastest pace since 1947 after the war. In terms of productivity, unit labor costs were expected to be 1%. They're 11.6. I mean, Ian, the U.S. is falling apart. All of the numbers this month look like garbage. I can imagine what the non-farm payrolls is going to look like Friday. It can't be good. I mean, this is a mess. The U.S. right now is a mess economically.
Yes. Yeah. I don't know if I can add much more to that, Rob. It's
just a statement of fact. It's not something to argue about, right?
And all along it's been a myth, the 4% unemployment rate, hasn't it? With the labour participation rate has barely exceeded 60%. So 40% of Americans who could be working aren't, and some for good reasons, some choose not to. But there's a whole underclass almost of people who are subsistence on the state, on the SNAP program. And it maybe that's even a political decision. The more people you get dependent on the government, the more likely they are to re-elect you, or could be as simple as that. But it is time for us Americans to wake up and take responsibility and do what we can do. And we've spoken before. There's no point feeling helpless about it because everybody can do something. It's
we talked about food this week, and we talked about planting gardens. Hey, if you can't afford a lot of gold, buy some silver from Ian because he has it cheaper than anybody on the planet. But plant a container garden, for God's sakes. Let's talk about that, Ian. So on our program Tuesday, I've had a lot of sources tell me that we're about to have a major spike in U.S. food supply costs. And I documented that dated back to COVID, not Russia, Ukraine, because it dated back to COVID because when we try to restart the economy, 120,000 people short in the U.S. food industry, demand destruction, building destruction, business destruction across the supply chain for food and energy.
And distribution.
But we expect prices to rise June 1. Talk about that.
Yeah, I mean, the world's largest wholesaler is going to bring in price rises across the board from 15 to 30% beginning of June. So 3 weeks from now. Now, that will take a week or two to filter through, or maybe a bit longer, the smaller stores. But that's on average, I mean, I was talking last year. I think you asked me what I predicted inflation would be, and I said 25%. We are going to see 25% rise in costs of goods and services for what 90% of the population has to buy, and they're not getting a 25% pay rise, for sure.
Food, shelter, energy, top three, Ian. Food, shelter, energy, what went up first? Shelter, energy, and now food's right behind it.
Yeah, and transport.
Yeah, I mean, you can't buy a damn car now. I was thinking about selling I'm going to go off a little bit on a tangent. I was thinking about selling my truck to my daughter because she has a couple of horses, which she, manages and maintains. And I don't need the truck anymore. She's old enough she can handle that herself. But I couldn't find a replacement vehicle, so I'm still driving my truck. Like, I can't find a. And I'm talking anywhere from luxury car to just a basic floor banger, Nissan or Honda or something. There is freaking nothing out there. So I mean, transportation has gone bonkers.
Yeah, I mean, 4 or 5 months ago, I saw a neighbor selling a 1987 Suzuki Samurai. I know the vehicles. I know how simple I bought it because I thought
that could be your transportation, right?
Just have a backup vehicle because I can fix most things on a car. I can change an engine, transmission, axles. I can pretty well do anything on a car, but you need time to do it if you do it yourself, and you need to be mobile whilst you're ordering the parts and stuff. Otherwise, most people are stuck. You put it in a garage, you put it in a shop, and it's $150 an hour, I guess, most in big cities So even if you've got a car,
a show about a recommendation for a motorbike, because I think you're right. I may need to buy one of those. Now will be the time to do it.
Yeah, just get something as a backup. So at least you've got some options. If your car does break, you're not held hostage to have it fixed immediately. You can source the parts and stuff. Yeah.
The whole thing is a mess, and I guess the big question and why I wanted to bring you on, and the big question I was going to ask you, you and I have been talking about this. I've been talking about this with other people, David Morgan, Chris Marcus. Oh my God, all the guys we've had on the show dating back to early guests like Daniel Amaduri, Lynette Zhang, Fernando Aguirre, survivor of the Argentinian currency collapse. The last 2 years we've been doing this. I've had a ton of guests on the show, and I'm bringing new ones like all the time. Chris Temple. Ryan Sistad, I bring new guys on all the time. But the whole supposition that I've had for Gold Silver Pros and why I started Gold Silver Pros is when this thing goes, it's going to go.
Yeah.
And I thought by 2024, 2025, we're sitting here in 2022 and I'm seeing it go now. Isn't this like the string has been pulled and now the whole blanket's about to fall apart?
Well, I mean, follow the money, you often hear people say, and I've had some clients who are getting completely out of the system and going into gold and silver.
Talk about that I'm sorry to interrupt you. Talk about that. You have one that's it's in banking, right?
Bank presidents buying huge amounts of silver, getting rid of their dollars.
You think he knows something as a bank president? He sees money flows in his job.
Yeah, and I've had conversations with bank people since I started the company, and one of them even said, "I know you're right. I know this dollar system is phony. It's fake. It's going to fall apart. But as soon as I start buying precious metals, I'm admitting it." And he started buying. And
he's over the mental Rubicon that we all face, where we see the data, we can't internalize this is actually happening. Because think about, we're born into a system our whole life. We're told X. You have cognitive dissonance that it's actually Y or Z, or maybe even XYZ4321. I mean, completely different world.
Yeah.
And you can see the data, but it has a hard time to get your mind over the hump, right?
Yeah. Yeah. And the more rapid the unraveling the system, the greater the few people are who have not only seen it coming, they've caused it to happen. I mean, it comes back to currency debasement. We can talk about the Chinese shipping crisis from the shutdowns in China. You can talk about Russia invading Ukraine and the supplies of wheat and sunflower oil and precious metals are adding to the rise of cost of goods. But the root cause is the debasement of our currency. That will filter through, and you get people are now not making investment decisions because it's become so unstable. How can you calculate any possible return on a business?
Well, that's the thing, and that's what causes destruction. When businesses can't determine their costs, they start killing their chickens and shutting down their factories.
Exactly, they stop making. You've got European companies stopped smelting aluminum. You've got European companies stopped making fertilizer long before Russia and Ukraine, because the energy, and that was the energy price rises pre the surge we're getting now. We've got European gas prices 10 times the price of gas in America.
And we talk about regionalization of commodities markets.
Yeah,
it shows up, especially in oil first.
Yeah,
but we're going to have that. And it's going to be weird. It's more expensive for us to get whatever here. Maybe that's something we import a lot of. I have to think about what it is. Maybe oranges and strawberries. And then somebody who needs liquefied natural gas like Europe is going to get it in the shorts. It's a regionalization of commodities market. So doesn't that mean, Ian, that pricing has to regionalize and we don't have one price for gold or one price for oil?
Yeah, I guess, especially when people start using gold and silver to trade with, each community will reach a level of what your ounce of silver, your 10th of an ounce of gold will purchase, and I guess it could easily come to a position where it becomes unobtainable for the usual routes. You'll be able to trade it, but you won't be able to buy it. So you'll have to do something to get your gold and silver, possibly, rather than just provide dollars. I mean, even right from the start of founding Ark, I've never held dollars. The only dollars I hold mainly are nickels, because I know the nickel is going to be worth way more. So I don't earn my bank very much money, because there's never much money sitting in the account for them to sweep and rehypothecate.
I think I was trying to figure out, what to say next. I think I get so much crap, Ian, for talking about the precious metals.
Yeah.
And I get so much crap for people saying it's an old white man's game. It's not. It's history and it's fundamentals. There's going to come a point where people realize what we're saying is true. Yeah. And it's going to be one of the most painful points in American history, I think, this time.
It is. It's still only 0.5% of assets under management, or perceived assets, are in precious metals. And probably many of our viewers have seen 𝙂𝙇𝙇𝘍 pyramid, and possibly 𝙈𝙁𝙾𝙆𝙕 talking about how all of the higher levels collapse inwards into what's at the bottom. And this is. I think we've seen this happening. I mean, personally, selling large amounts of gold and silver to incredibly wealthy people. Why are they doing that? Because they want to protect.
They're running all those markets on top of it, and they know because they run the books.
Yeah.
How healthy those markets are and or aren't. So, for example, take 𝙄𝙄 coming on the channel last week and saying, "Hey, Rob, the mortgage market's imploding because these ETFs around mortgage-backed securities are imploding." Why?
Yeah.
He went to one of the ETFs and looked at the AAA tranche and saw that it had low credit score debt in it, because there's an Excel sheet, and the average credit score is sitting at 640, 660. That's not AAA debt. That's B minus.
Yep.
And they were selling it as AAA, and the government, the Fed, was buying it, and that's what kept that market up. But now that the Fed has said they're going to taper and they're raising rates, and they're no longer the marginal buyer of shit debt, shit mislabeled, mischaracterized debt, that's why you saw the ETF come down. And 𝙄𝙄 caught it because he's like a savant with this stuff, with numbers. He caught that mortgage-backed security ETF cratering. Has been all over his Twitter at 𝙄𝙄 Games for anybody who wants to go look. And that's a canary in the coal mine, and that may end up being the Black Swan we've always been talking about, not Deutsche Bank. Because if that mortgage market crashes, it's over for the debt markets. It will start a cascade. Done. It'll take out everything. We saw that in 2008, 2009. And what won't work this time is the same stupid policy of just increasing reserves. And somebody pointed out, I think it was John Titus, and I need to link this video and talk about it. John Titus did something back in November, which is now coming to fruition publicly. There's two circuits of money. There's private and public. The bank reserves had been increased in 2008, 2009. Now they're actually increasing cash, public money. And those two circuits of money are being increased at the same time. Why? Because we're at a point the system will collapse without it. We're literally hanging on a thread.
Yeah.
And once people start to figure out mortgage-backed securities are creating, we already had the repo market crisis again in 2019. We're sitting right there on the edge. Right there on the edge. And you see it in the bond market. You see 3, 5, 7, and 10-year bonds all priced above 3%, almost identically priced.
Yeah.
What that means when you have those tranches of U.S. Treasuries identically priced, it's moving that risk further and further to the forefront, to the current time. They've got 2-year, they got 1 year, and they got ultra short term. There's only 3 issuances, major issuances right now aren't over 3%. And you see it shifting. First it was the 30-20 year, then it's the 10, now the 7, the 5, and the 3.
Yeah.
What's next? The 2, right? The 2 is the second biggest issuance behind the 10. Okay, and then after that, what do you have? Short-term markets, and that's the stuff that goes into repo. What happens in a repo crisis? Banking system freezes up, boom, over.
Yeah.
We're that close.
And
so I'm kind of monologuing here a little bit, but to me, that's what's happening. But I know you're a big student of the monetary markets. What's your opinion?
Well, once I'm a big student, I'm an observer, but 2008, the Federal Reserve held, I don't think they had any mortgage-backed security debt. Now they've got 3 trillion. So now 3 trillion of potential garbage is backing the dollar.
Mm-hmm.
And then central banks are loaded up with government bonds, which are cratering in their value. So if they actually had to mark to market today, I bet they're all underwater. I bet Deutsche Bank is completely bankrupt. I mean, they were hanging. They only needed 3% of their loans to go bad, and they were done. And that was a year or 2 years ago. Commerce Bank is not far behind. I cannot see how they can paper over the cracks this time. I mean, it's
it's scary. But it's reality, and people have not woken up. Like I said, it's cognitive dissonance. You can see all this stuff across the ticker, and it starts with the mainstream financial shows, and then your financial advisors, and then your financial enthusiasts in society. each one widening out, the base. And then you get to the general public and it's getting there, but they're not accepting. I know people who know I just went to have lunch, and what was the talk about? The economy. But is anybody doing anything? No. They're talking about it like it's almost like it's a TV show.
An abstract event. Yeah.
Yeah, but it hasn't internalized to where, they have their OS moment where they got to do something.
Yeah.
Yeah. But when that happens, Ian, you're going to have more orders than you know what to do.
Literally, I just had a knock at the office door. Some more deliveries coming in, but it is going out faster than it's coming in. There's still plenty of product available for direct shipping from the wholesalers. But that does change. A few weeks ago, I was quoted, I could buy product, but I was not going to be given a delivery date. No delivery date given. Not an estimate, nothing. Unknown. And
so it's like a pre-sale with no end date, right?
Yeah, I have to pay in full with my order, and then you might get it somewhere. It's like,
oh, okay. So it's like walking into the bread store and saying, I want to buy bread, and the guy, the bread maker's like,
come back in 3 months. Yeah,
give me the money and I'll call you. I'll let you know.
Yeah. But
don't call me, I'll call you.
Thankfully, I've got a reasonable amount on the way. But if you've been prevaricating, just have a think. It might not be available in 2 months or 3 months' time. Anything,
Yeah, the other thing that I wanted to say that people give me crap over is not only talking about gold and silver and being involved in precious metals, but I keep saying we have a shortage of silver. Now, a shortage and being out are different things. A shortage means, and I want to define this for people so they stop, like attacking me on social media. Not the majority of people aren't doing it, but some do, because I don't think they understand the concept. A shortage is when you have more going out than coming in. It doesn't mean your inventory is completely gone.
Yeah,
your inventory completely gone means you're out, right?
Yeah.
So what we see on the COMEX, what we see the mines producing, what we see the demand is, and this is before the increased monetary demand that we know is coming because of the aforementioned bond market crash and the fiat crash. We're not even into the expansion stage or the panic stage. But we know the numbers say that we have a shortage in terms of what's made every year, what's available in stocks every year. So here's made on the left side of the supply chain, here's stocks, and here's what you go out the door in sales. What's made every year is already behind 110, almost 200 million ounces. What's in store has been shrinking. Once that what's in store is gone, then you're talking about having a negative supply.
Yeah.
A negative real supply, which is going to spike rates like that.
And
because when you go to negative supply, it means prices must go up to pull silver away from anybody that's got it.
Yeah.
To force that back into the market. So we're not far from that. So yes, we are technically in a silver shortage, but we're not out yet. But Ian, just from your point of view as a dealer, what is your view on inventories versus flow? Where are we like in your part of the supply chain?
Well, stepping back a little bit, premiums haven't stopped rising for 6 months.
Right.
It was slow. It was every other week, 5 cents here, 10 cents there. And that's just increased. As most people quote the American Silver Eagle has gone from $3 something wholesale to $11 wholesale. Kilo bars have added another $1.50 on the wholesale price. So
that's a lot.
And I don't think anyone actually really knows the actual inventory that's available. It's not published data. None of my wholesalers publish their. I can find out from some of them what they hold, but it's a long process. I have to keep keying in an order until it says unavailable. So then I can make an estimate of what product they've got, and then talking to them, they can tell me what's coming in or not coming in. A while. Some people are quoting 8 weeks on certain coins, Britannias. And then we got the whole issue of Sunshine Mint making the blanks for the Britannias, the Krugerrands, and the American Silver Eagle. So it's it's an incredibly small world, the silver world, yet very obscure. I don't think anybody actually really knows. And then we were supposed to have had 330 millions go into the ETFs last year. Well, did it actually go in there, or have JP, the custodian, borrowed it? Or counted it several times? Yeah, maybe there's only 50 million actually physically available in there. That might account for taking up the slack, and then they just hope everything will just go away. And then we had the famous smackdown, didn't we? What's his name?
So a couple of points you had there. Even though, yes, we don't know the interiors of the wholesalers, if you back up behind the wholesalers and go to COMEX, we've seen a drawdown of about 60% in the last year and a half of what they had. Yeah. Now, there's been some more put in, but how long can that last? When we know, last year during Silver Squeeze, we know when people went to SLV and took 110 million ounces out of London, they were within 3 more days of collapse of that market. So I think that they are razor thin on the big markets that feed the wholesalers. So if they're razor thin there, the wholesalers can't have that much. I don't think they're keeping 2 years worth of inventory.
Oh, no, probably a week. It's probably a week. Yeah. It's the buffer.
It's a just-in-time system.
Exactly. And I think we all know is when the premiums rise more on the 1,000-ounce bars. They've gone up 10, 15 cents in the last few weeks. They can't go too high, as that'll create an arbitrage, and some big player will come in and take huge contracts and take physical. So they can't let that go too high, because that will really reveal how thin it is, the market.
So Ian, just to clarify there, because I'm stopping you a lot to clarify points, because you and I understand this very well, but a lot of people in our audience ask me to clarify, and that's why I'm doing it. So people have asked me, how do you break the derivative markets? Well, what you just said is how you break them, because they're between a rock and a hard place. Yeah. If the guys come in and play arbitrage and take those 1,000-ounce bars off, that market collapses. So they can't let it go too high, but they have to feed enough supply. Well, what happens when they can't feed enough supply to cover up what? The premium. What is the premium really a measure of in the retail market? It's a measure between the derivative market, gambling casino, where they don't look at physical, and the actual physical demand. But once the people on COMEX start figuring out you've got a shortage, what happens? That game is over.
Yeah, very
rapidly. Gobble up whatever silver's left over, and that price runs. Yeah, that's how you break the derivative market, and I don't think we're that far from it. That's my opinion. I'm sorry to interrupt you, but
no, that's fine. I mean, that's one of the reasons myself and silverback precious metals, they're cutting up the 1,000-ounce bars, making slices. They're grinding them up now and casting 10-ounce rounds. And soon they'll be making 10-ounce bars for you and me, Rob, won't they? They'll be doing a Gold Silver Pros 10-ounce bar. They'll be doing an Ark Silver 10-ounce bar. So we may be the last people supplying silver retail, because we're buying the 1,000-ounce bars and we're bypassing the mints. That whether it's deliberate or not, I mean, you've got the Canadian mint. They seem in complete chaos. Don't seem to know their arse from their armpit. You would have thought by now they could. I mean, it's not that hard, is it? Making coins and bars.
It's a pretty simple process. It's making a die, it's stamping the coins, it's getting your supply. I mean, they've been doing it for hundreds of years.
Yeah, I mean, Jim was making these in his shed. God bless Jim Silverman. He's doing an excellent job.
Yeah, this is just basically Jim and a couple of guys, doing this, and he pours those 10-ounce coins from the scraps of him cutting the 1,000-ounce bars, and he does it as a very small shop. So you're talking about, the Royal and Canadian Mint, the U.S. Mint. How come they can't?
And we know how smart Jim is. I mean, heck, he works as a NASA mathematician.
Yeah, he's a brilliant guy.
He's smarter than both of us multiplied, I think. He's realised precious metals is the way to go. He's chairman of Citizens for Sound Money. Some really smart people have worked it out apart from us.
Well, let's just mention briefly Ark Silver. I think we're kind of over time on our recording, but you run Ark Silver. You started it because you believed it was the right thing to do, bring silver to people the cheapest possible. because you believe in honest money, you believe in God's money, right?
Yeah.
Talk about how people can get in contact with you if they're interested in ordering silver, and just in general what you guys have.
Yeah, just go to Rob's data at the bottom of the video. Approved, well, approved's not the right word, but suppliers that you like. So you can send me an inquiry through that. Please let me know if you've received my response, because sometimes the emails go to people's junk. But yeah, we've got the whole range of the Silverback precious metals product. You can have custom weights cut in just a few days as well on the bars, 10-ounce rounds. Just got a whole load of kilos, just come back in again, $3.40 over spot. We've still got the famous Kennedy 40% at $1.29 premium per ounce.
Maybe about to buy a bunch of those from me, Ian.
It's the best, I think, in my opinion. And plenty of Warnicles, 20 of them equal 1 1/8 ounce of silver, $2.50 premium on those. I think they're great. A bit of history as well. The copper is free, and the manganese is free. Then we've got all of the other coins are available. They're a bit pricey. I have got some rounds coming in at around the $4 premium, which is about $1 less than everybody else. And we can get everything else, even kilos of gold. We can beat anybody's price on gold.
That is a gorgeous part. Can you hold that up again?
Yeah, sure.
That's gorgeous.
Yeah, it won't be long, and one of these will buy the average American house. Yeah.
Yeah.
And pretty well every other product.
Yeah, awesome. Thank you so much, Ian, for coming on. Like I said, I know we went over time, and thank you for being gracious and giving us a whole bunch of time today. We appreciate you. Just remember arksilver.com. You can order directly from me and off the website. You can go through our website, Gold Silver Pros, click on Precious Metals Deals. We have a form there for you. It helps track, what comes through Gold Silver Pros, and does help the channel, so we do appreciate that. Thanks, everybody, for coming by this one. We'll bring Ian back on again because he's one of our recurring guests. And thank you, Ian, for stopping by today.
Thank you, Rob.
All right. See you next time.